With the Queen's unfortunate passing recently, today we wanted to uncover what it actually means for the Australian property market. Could Australia become a republic? And are we still the lucky country? So, Jaden, let's talk about, is there any chance that we'll become a republic? And what does that look like if that actually happens?
Yeah, so the Queen Elizabeth has been in power for over 70 years. And obviously the Australian property prices and property market have changed significantly in that sort of time. But the sort of movement to become a republic has gained a bit more traction since the last referendum we had back in 1999, especially because Anthony Albanese, our current Prime Minister, is actually a known Republican. He's a long-time Republican and sort of previously said that he'd like the opportunity to have a look at it. Obviously in sort of the wake of the Queen's death, it's a bit on the nose to be sort of going out on a limb now. And he's even said he's, recessed Parliament for next week and done some things there. But I thought what might be interesting is even sort of taking a step back before we dive into that, look at some other countries where they've gone through a similar process. And Canada was in a similar situation. So when Canada became a republic in 1982, they actually had a lot of issues with real estate prices. They went through a recession. And although going from a monarchy to republic didn't directly cause this, there's a lot of things happening in the Canada economy. It could be a contributing factor. So it could be something to think about if the republic debate gets a bit more pushed in the next couple of weeks and months, sort of post the Queen's death. And even with, I guess now King Charles taking over $27 billion of real estate, interestingly, Buckingham Palace is valued at something like $6 billion. It's pretty, well, 5 billion, pretty wild as a valuation, taking on that many properties. It'll be interesting to see how the public take it, because even in, recent surveys and stuff that have been taken on the Australian Republic up until last year, the most recent ones, people are still against it in Australia, compared to Canada, where they were pretty much for becoming a republic and sort of leaving the crown. There'll be sort of more debates about this. This article was written 2 or 3 years ago, but pretty much, the cost to become a republic is a few $billion by the time you sort of flag plebiscite. So like, hey, what do you think it should look like? Elections, you try and do new coins, currency, all that sort of stuff. It can be a pretty costly exercise, and even the cost of having the monarchy is only a couple of dollars per person. So I guess, like, as far as the monarchy debate, I think it's going to be something that's going to gain probably a bit more traction as years go on, even depending on people's perception of Prince Charles. Like, it was kind of like when the old Pope died and people had all these connotations of growing up, and I think it's going to be the same with Queen Elizabeth, where she's been in power for 70 years. Like, it's all anyone's probably going to be able to remember. Even our parents, even our grandparents wouldn't actually remember King, I think it was George, her father, before that. So it's going to be interesting to see if this does gain traction, the Republican debate, and if they do a better job. Because I don't know if you remember, Nathan, but when they went through the referendum last time, the questions were really poorly worded. It was like this quasi republic where we're going to keep the flag and coins, and the Queen was still going to be involved, kind of like model on Canada system a little bit. And then, I guess then it's going to be interesting to see what impact that's going to have on the market and even us financially moving forward.
Definitely. And we've seen other countries such as Singapore. They were previously a monarchy through Malaysia. They moved successfully away from that. So I guess anything really can happen. It's really going to be one of those things, watch and see. We'll really see how it plays out moving forward. Jaden, I guess for those that are out there that are wanting to get in the market, should they be timing the market? Should they be worried? Is this something that they should be concerned about right now? Or is it really just a small ripple that's not going to have a big impact on the Australian market right now?
Yeah, I think at this point it's probably just more news, more sort of noise in the media. I don't think it's going to really directly impact anyone here. The Queen's passing might slow things down. It's not like in England where things are getting shut down. It's going to actually be pretty disruptive to their economy, I guess, in the short term. I think for here, because we're pretty far removed geographically and even sort of financially, it's probably not going to change things as much as probably the cost of living debate. The fact that a couple of weeks ago, and you did a video on a couple of weeks ago, that the sort of migration caps were increased in Australia. So there's going to be an extra 30,000 migrants coming to Australia in the next sort of 12 months onto the cap. So it just means there's going to be more people. We're almost at full employment. So there's going to be more competition for sort of pays and pushing some of those pays up. And there's going to be more competition for housing, because there's obviously been a lot of housing knocked offline. There's issues with construction, which we'll cover a lot. So I think, and even sort of talking to a lot of people on the ground, they're actually saying, well, maybe the next 6 months, property is going to sort of bubble along a little bit, but then potentially coming into next year, we could end up seeing things heating up and the prices resuming, going back up, which is a crazy thought. But I guess we'll have to watch this space.
And Jaden, what do you say to those guys out there that are trying to time the market? They're waiting for things to turn or waiting for it to keep going down before they jump in.
Yeah, I think it's like anything. It's almost impossible to time the market. We did a video a couple of weeks ago on a buyer that was, anyone that was looking at buying a property over a 20-year period in a property in Melbourne from 2020, and it sort of showed over that period. I think there were 5 times where the market sort of actually went down. And if you timed it perfectly, if you were you had the Back to the Future, almanac, and knew exactly when the market was going to crash, and you bought it at that point, it only made a pretty small impact. It was only like sort of $50,000 in extra equity you would have had you perfectly timed it. Whereas if you sort of take the longer term view, if you're going to buy, and as long as you know you're not going to buy and sell in 12 months or 3 years in the short term, if you can sort of ride out a whole property cycle, which generally ranges from sort of 7 to 14 years, depending if you're going to hold the property for that time, then it's actually all going to sort of work out fine and in the wash, over sort of long time. You'll work out fine ahead.
Jaden, on Tuesday, we saw the Reserve Bank increase the cash rate by 0.5%. What can borrowers do? This is the 5th straight increase in a row that we've seen. What are borrowers really able to do to really combat what's happening?
We've never seen a bigger divide between what they call sort of front book pricing. So that's what the bank's offering brand new customers and saying, hey, Nathan, you're a shiny new customer. I want to give you the cheapest rate possible. And what they give sort of back book, or like your existing customers. So if you've had a home loan for more than 2 years, it's really time to review that. In the first instance, you can try and hit up your bank, say like, hey, bank, I can see on your website you're advertising. It happened the other day with some clients of ours with Suncorp, and they said, well, you're advertising this rate on your website for new customers. Why can't I get that? And Suncorp kind of said, sorry, bad luck. So there's different degrees of that. Other banks like ING will potentially just pull their socks up and help you out straight away. There's varying degrees of that. If they don't come to the party, if they don't renegotiate, then hit up a broker. That's what we do. We'd love to help you out. We're getting a lot of success in refinancing, even a lot at the moment where banks are paying people to refinance. So, you're getting paid $3,000-$4,000 to switch your banks and get a lower rate. It's a bit of a no-brainer to help with some of those costs. And a lot of cases that we're seeing, by refinancing, it's helping people because the rate's lower, the costs are lower. It's actually helping people pay off their home loan 4-5 years faster than they would have if they'd saved with their bank. So it's pretty wild. It's definitely worth checking out. Nathan, I guess to further that question, what are you sort of seeing, like consumer wise, as far as like, what are people seeing? Earlier in the year, the first rate rise, people freaked out. They're like, oh my God, everyone's been saying rates are on hold. How are you sort of finding that transposed throughout the year? Are people feeling more confident? Are they feeling less confident? What's sort of sentiment on the ground?
I think the key here is there's been a huge lag period between the rate rises and it actually affecting borrowers. We know that Commonwealth Bank recently came out and said it takes about 30 days for them to recast the repayments in their systems. They have to give another 32 days to give notice to borrowers that their repayments are changing. And then really on that next month, the 3rd month, is when borrowers are feeling it. So if we think we've had 5 rate rises, really only the first one in May has actually started to hit the back pocket a lot of borrowers. So there's been probably a little bit of a delay in terms of what people are feeling, what that actually means to borrowers' bottom line. And I guess people are still trying to understand, why is this happening? And the Reserve Bank is trying to combat inflation. One of their tools is using the cash rate to slow the amount of spend that's happening in the economy. So I think in coming months, we'll start to see borrowers. We're seeing it already. A lot of borrowers are asking the question. They're hitting us up. They're saying, Nathan, my rates have gone up. Why am I paying $1,000 more a month on my mortgage when I've been a good borrower, I've been paying on time, and the bank's charging it to me? A lot of times we educate our clients to let them know that it's the Reserve Bank's doing. They've increased the cash rate, which the banks are passing on. And that's where you can get in touch with us at huntergalloway.com.au or call us on 1300 088 065. We can review your mortgage. There's no cost for our service. We're mortgage brokers based in Australia and deal with people Australia-wide. Guys, thanks for watching.